All right, welcome back for the episode of Carnivore Trades. Today is Wednesday, April 19th, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis. By the way, I will be doing another little Twitter space with my friend Josh from Crypto Fundamentals. That will be at 4:30 today. I'm not sure where the tweet is here, but there it is. So market update number 2. So we're going to try and do this, maybe bi-weekly, maybe once a week, something like that. But yeah, so that will be out there. We'll be talking about markets a little bit, just like we did last Friday. So anyways, let's get into it here. So markets are, basically flat again. And I was just telling my members here, if we look at the Spiders daily, if we go back to last, I want to say that's Thursday, so almost a week ago now. Look at where we closed last Thursday, 413.84. Let's go to an intraday here. So 413.84, and look at where we are. We had one little minor down day, then we closed basically flat to that price. We had that big gap up yesterday, and then we closed slightly above where that price was, and now we're literally right on that price essentially. So market's really flat as a pancake pretty much all week long. And we do have to, get a little cautious here. So I think we're coming into a risk period, starting probably, I would say, tomorrow. Now it is options X week, so it's very likely that they probably keep us held up right now. Well, you're getting into danger zone levels here on the VIX. If we take a look here, so VIX down another 2.85%. We had VIXpiration today, so you see the VX futures gapping up, rolling over to the M contract, I think it is. Right. Yes, the M contract. So that's the June contract. And, the VIX itself, that already filled the gap and then some. That's at 52-week lows, made new 52-week lows yesterday and another one today here. We got to go all the way back down to January of 2022. So, think about that, right? So the VIX is at January, this is before the bear market started, and look at where the spiders are, right? So we're seeing a pretty significant amount of complacency here, and I think we are into the risk window. And these day to 2 days after these VIXpiration rollovers have been pretty volatile the last year. I don't know if we're going to get one tomorrow, but I would say watch out for some fireworks. So I do have some volatility penciled in. It could be some upside volatility, though, and I can't rule that out. I'm at the point I tweeted this out earlier. It wouldn't surprise me if we got some bogus news in the next day or two, maybe next week, that pushed us up to that 420 handle, or at least a pierce of this double top. That's the way the market's kind of behaving to me right now. The fact that we gapped down this morning, and we grind it up. Look at this. It's just like an algorithmic buy program all day long, right? There's no deviation. There's no up, down, then pull back, and then this and that. No, it's just a tight descent there, pretty much like a perfect angle. Before we had this little bit of profit taking, markets close in 5 minutes here. And Tesla is reporting after the bell. So I'll try to take you into that. You see Tesla dipping down pretty nicely there. Nice dip on Tesla. So that was at, open at 178, got all the way back up to 183.50, now back to 180.50. But, to me right now, it looks like they're just too many people buying calls at this 414 area, right? And we've seen that like I just said, the last week. We get to these highs and the bulls get all giddy. We get that big gap up yesterday and they just push it back down. So that may be kind of a max pain area for right now. So again, options X does throw a wrench into things. Like I said, the risk period starts tomorrow, but they could just float us the next 2 days, right? They've been floating us the last 5. They've been floating us since, the banking crisis, right? They've just been floating up. So I can't rule that out. But we are getting into a risk period here, and I would say extreme caution at this point. We've seen the negative signs, right? The semiconductors here, red on a day where the market's grinded all the way back up, and they are, deep red today. They're down almost 1%. They are off the lows, but they're down almost 1% there, as the Qs are flat. So, big tech, Apple doing a lot of the legwork. Tesla did gap down this morning. Basically, they cut their EV prices again. And that's ahead of earnings. So maybe their earnings are going to come out crappy. And they did that to kind of lower the bar a little bit. So maybe it can rally. Who knows how a stock is going to react on earnings? I've seen good reports completely crash a stock and vice versa. But Tesla, it's hanging in there. You have kind of a little bit of a bear flag look here on the daily. They can say one thing and it can completely negate it. Okay, the only thing that I know that can completely negate a chart pattern is earnings, and so that's possible. If they push down, obviously that's going to be a negative for the market. But the environment that we're in right now, it's still been by the dip, like, right? So if we look at the spiders, we're down today, but it's 48 million shares. This is like holiday volume. Like this is like August, third week of August type volume right now. And if you said that there was a banking crisis like a few weeks ago, you would never think that based on this price action here. But it's all, when it matters, it'll all matter all at once. But right now, market is still ignoring it, and it's able to shrug off this negative news. But right now, we're getting very close. I mean, maybe they can hold us up another week. Maybe they can hold us up into FOMC. I certainly can't rule that out. So that'd be another week and change. But we'll see what we get here. But I think we need to be very careful in this environment. And this rally here too. Another thing, if we look at the Qs, what's taken so long? I said that back in February too. Like we have a bull flag, right? And we chopped around. Even if we go back to the spiders chart, you had a nice pullback, and I said, what's taking so long? Why can't you get above this pivot? If bulls have full control, they should be able to push it up after this little consolidation, and that failed. If we look at the triple Qs again, why can't, this is a nice, everybody was looking at it, everybody was telling me how bullish it was. There's your bull flag. Why can't you push out? So it's been, we've been here for how many weeks now? So 4 weeks. So if it's going to break out, it's going to have to do it kind of soon, I think. Otherwise, you run the risk of a failed pattern. It just looks tired here. The Qs have been underperforming, right? So we have, a high here from the 31st. And if we look at the spiders, we're above that. So the Qs, tech should be leading in a bull market. The Russell should be leading in a bull market. Neither of them are doing that. In fact, the Russell hasn't even gotten above the March 10th breakdown bar. So these are red flags. We've talked about them ad nauseum. The Dow Transport's having a nice day today, but that's a bear wedge. Again, so these are red flags, and I think we're starting to get close to, my thing is if we're bullish, why can't we break out? We should be able to break out. We should have been able to break out. Again, like I said, maybe they can hold us up a little bit longer. Maybe we can get some BS news that gives us up there. But right now, it's looking like the market's going to need a catalyst. And again, this is all happening. Like the SPY is floating up here, barely floating up, and the VIX is getting hammered. Like you would think that the spiders were like in rip, full rip mode right now, and they're really just kind of doing a lot of the work, like sometimes in the overnight here, like we had these gaps obviously, and then we've had a few gap downs where it's like buy the dips, but it's I don't know, this market's definitely tipping my antennas for some type of a surprise. And I think tomorrow we can see definitely some pretty impressive price action. I'm not sure if it's going to be up or down, but I do think tomorrow some fireworks could definitely go off. Markets are about to close here. Look at where the spiders are. So 1 basis point, 2 basis point here. So I'll be trying to take a look at Tesla after the close, but that's where we're at right now. The Dow, again, still holding up. We have a nice inside bar there. If that does get a bid, that should get you to the 343 area, and that will be very good resistance. And there's the closing bell here. We'll go look at Tesla, and I'll try and put on my after hours chart there. They usually are pretty quick to report, but we'll take a look at them in a minute. Let's get over to the semis. So SMH, again, down 1% on the day. And you almost have kind of like a bear flag here on the daily too. It's still in a nice uptrend, so this can, this can still hold up if the market holds up. But, this is making lower highs. I don't like that it's, you hit the 50 moving average, and now you're not really getting a bid off of it. You're kind of just going sideways. And we're watching this big rising wedge here too. So, semiconductors are telling me there's a problem. China's constantly circling Taiwan. That's something the market's completely ignoring, by the way. That can be out of left field. But yeah, semiconductors are a problem. IGV made a new nominal high yesterday, backed off today. No problems here. Still a nice green bar there, and you're sideways. So this can still get the upside bias to 310. Nothing's really changed on that front. But again, kind of like the Qs, like, all right, come on, like, you got your higher high, right? You got your inside bar. You know, we we gapped up yesterday and we couldn't hold the gains. This is happening. It happened in the Qs yesterday. It happened in the spiders yesterday. It happened in everything. So those are the problems I'm seeing right now. Transports here again had a nice day today. They actually had a really nice day today. Take a look at this intraday, little chop around and then big surge, really all day long. No new, did not make a higher high. It's still been struggling with that 50 moving average, and you have a weekly bear wedge here, right? So weekly bear flag. That's going to be a problem if it can't negate that. But transports are hanging in there again. We still have those levels. If you get above that 50, then you can get to 14,750. That's really all I see for it at the moment. Over to bonds, into bond land here. So the 2-year getting hit again, and let's look at the yield. So again, if we lose these pivots here, if we get it back above these moving averages, it's going to be problematic for the market. No matter what, how you look at it, the market right now is basically priced in. It's trying to price in a slowdown, but the 2-year, if this starts to go higher, then the bond market is telling us that's that may happen, but rates may not come back down, and the market has banked this entire rally from October all the way out on the fact that the Fed is going to stop raising rates. If the 2-year continues, if the note continues to fall and the yields continue to go up, that's not going to happen. So be careful with that. Let's look at the 10-year yield. Again, up 84 basis points here on the TNX, still struggling with these pivots right there. But again, you guys know I'm not seeing a ton of downside in yields. So they might have one more push. If we get the Fed to come out on the FOMC and say, hey, we're going to stop hiking, something like that, or we're going to pause, you might get a knee-jerk reaction down in yields, but it's not going to last very long. The 30-year, again, struggling with that 3.8, just call it the 3.8 area, but I don't see a ton of downside in that regardless. Let's take a look at Tesla here, check back in. So it looks like they might be out. Yeah, there we go. There's something out here. So that's bouncing around. Not a strong reaction, though. Usually, if it's a big reaction, you'll see a big move immediately. So really just kind of flattish right now. We'll check back in on that in a little bit. So basically just flattish to slightly positive there. Now it's turning negative. Anyways, let's get over to housing here. So XHB continues to be strong. I see about $70 on the daily time frame for that to be good resistance. I think the ITB at this point, this is going to pierce double top. This is just where it wants to go. A lot of resistance up here, but that's where I think it wants to go there on that daily, weekly time frame with it curling back up like that. I would love for that to coincide with a move into this 420 handle on the spiders. That would probably be a pretty good sell signal, but home builders holding up and they need to be respected here. VNQ still trying to put in kind of a bullish pattern here, but you're below the moving averages. Not the best pattern here altogether. Maybe we can get to 85.50 again. We've talked about that, but it's trying to consolidate, so it's trying there. We'll leave it at that for now. Financials over to XLF. Let's take a look at WAL. So Western Alliance, this is a regional bank. They reported earnings and they did well, up 24% today. That really helped out the KRE, and that was one of the reasons that kept me from getting bearish this morning. Is we had the gap down, yes, but if you look at KRE this morning, it actually gapped up and it held the gains. So it was holding up really well. And KRE lately has been almost kind of like a cheat sheet for which direction the market wants to go in on an intraday basis. And when it's up, the market generally gets an upside bias. When it's down, the market tends to want to go negative. But KBE also getting a bit off that, and XLF obviously floating higher as well. Morgan Stanley reported that gap down, right? So that gap down, but the Western Alliance just completely negated it, and Morgan Stanley actually finished green. So Morgan Stanley hanging in there. Okay, I still like this level here on XLF, right around that 200 moving average, 33.75. That's going to be pretty good resistance, especially if we get up there in the next day or so. So we'll watch that for XLF. But I think a lot of these, part of the bank rally right now too, is put decay. So there was a panic, right? When did the panic happen? In March. So when do you buy put protection for? April. So you're seeing some of that put start to decay as things have settled, and that's why you're getting that big outperformance bid from the XLF and from the financials in general. Obviously, JP Morgan's earnings helped, but it's also getting a tailwind from that as we kind of get closer to Friday. Over to broker dealers, so that had a nice bid as well. We'll watch 470. That should be good resistance there on the daily time frame. Still a weekly bear pattern, though, all things considered. Crude here. Actually backing off a little bit. I'm watching that. I don't have a. I'm kind of neutral on crude right now. I think ultimately it has to go down, but in the near term, it can catch a bid in this area. If that 20 moving average slopes up, which it's doing, you get into this area, that 100 and that 50, that can act as support, and you could get one more push up before that happens, before it does fill that gap. Everybody's looking at the gap. Everybody wants it to fill that gap. So a lot of the time you'll get a fake out and then it'll kind of go up. So right now I'm neutral on it. Ultimately, big picture, I think it's got to go down here, but I can't roll up one more push up into that 85 range for now. Maybe even, somewhat higher. I mean, technically, on the weekly, this is just consolidation. Now, if you close the week below this pivot, that would probably be a big negative. So below 79 even, that would be a pretty solid negative for crude, and it probably goes down and fills that gap pretty quickly. But we got 2 more days left. That's plenty of time for them to reverse this. And by the way, given this look here, and I know how OPEX week, I've traded through many thousands of them probably. I know people are going to jump on short today. I'm like, there is the sun rising in the east. That's a sure thing. Taxes and death are a sure thing. And I know for a fact, a sure thing, people are going to jump on short because this broke 79 and they might get squeezed. So just be watching out for that. Just like they jumped on short down here, so just be careful with crude here. I don't really have a bias on it at the current time. XLE hang in okay. This is not a bad pattern as well. Again, we'll give that the upside bias to the upper 80s if it can push up. XOP had a little dip today, came off the lows, held the 20 moving average, so that's still safe for now. I think it filled that gap there. Not quite, 127.59. Yeah, it didn't quite fill that gap, but close enough there. And it held the 20 moving average, so I'll give it the upside bias to 135 in the short term here. And then OIH also hanging in there. Okay, if this can shape up a little bit more, this can go higher, but again, it's too volatile for me to touch at the moment. Nat Gas giving back some gains here today. Interesting. So the little correlation I've been talking about with the DXY, that kind of broke down a little bit today. I think a lot of that has to do with options X. You get these kind of correlations to dissipate a little bit when you have these periods here, but dollar index was green, and that's been positively correlated very well with natural gas over the last year, more than year, in fact. But nat gas coming in a little bit. We'll see what it does tomorrow here. It did get a close above that 50 moving average though yesterday, so bears coming back in and trying to push that down. A lot of people are trying to get the bottom on this, so they could just be trying to wash out those call buyers there. Anyways, over to the dollar, still watching this falling wedge pattern. Downside, maybe you can get to 100 if it flags though. It can go higher, so dollar index, those are the levels I'm watching right there. Gold on the weaker side today for sure. It did violate that 1994 area, but you got to close above it. However, we do have those lower, 1, 2, 3 lower lows now. And just technically it looks soft. I don't like that you had a higher high here and then you made a lower high, or excuse me, a lower low. I don't have a problem with it piercing 1994, but it just, the fact that it's still red too, I mean, it's going to need to shape up. It's not to say that it's dead here, but it's going to have to shape up a little bit more over the next couple of days. Ultimately, it's holding the 20 moving average. You're holding trend, but it is still overbought, and I think needs to come back in regardless. Silver, same thing, although it did have a much better reaction today, up 32 bips, and basically touched that 20 moving average there, and all these pivots too. So again, those pivots held. Typically, when you get a big surge like this, that first dip is going to get bought pretty quickly. So we'll see what it does here. But again, I think the dollar is close to a bottom. So I'm not seeing a ton of upside in the metals currently, but silver is definitely holding up much better. Platinum also really popping up here. So this does want to go pierce double top here. That's going to be pretty good resistance. So again, that big red bar with volume. You need to consolidate to get through that, but not to say it can't pierce through it. Platinum's a thin market, and they can always overshoot. Look at the daily intraday candle here, that big sell-off, then a huge surge all the way to green. So I like platinum better than gold and silver currently, but you know, it is going to double top. Just keep that in mind. Copper here, stuck in a range again. I don't really have anything to say about it. You know, maybe you can make a case there's a trend line, right? So small trend line there. You're basically into that now. You could even say there's kind of like a wedge pattern. I don't really like that top trend line all that much, but you know, as long as it holds this area, it can get up into that 425 area. So we'll just leave it at that for now. All right, over to Bitcoin. So interesting price action in Bitcoin, definitely interesting. So we had an engulfing reversal yesterday and then an engulfing reversal today. That's very uncommon. That tells me sellers are starting to gain control to a degree. That doesn't mean that it can't push back up to that 32,000 area, but I think we're starting to see some distribution. So it is still holding trend, holding that 20 MA. But after you get a sell candle like that, and then a reversal the next day, you should follow through to the upside, right? Because you just trapped shorts, and you should at least, you know, maybe not follow through, but maybe you should at least have like a flat day, an inside hammer or something like that. To see Bitcoin come in that sharply, it's definitely a negative. On the weekly, it's still not broken. Everything's fine. But, you know, again, we're still looking for pretty good resistance up here on that 32.5 area. So again, I think upside is limited regardless, but interesting price action there to see it have an engulfing reversal like that right after an engulfing reversal the previous day. Anyways, going to wrap it up here. Let's go back over to the Tesla really quickly. So yeah, settling around 177 looks like a bit of a nothing burger so far. It did come in pretty sharply, but nothing crazy, right? So 177 takes you down to basically this low pivot. Actually, yeah, it takes you about, trying to get this exact. So this gap fill is at 175. So you're basically at the lows of the day. That's really it on Tesla. Now that could change. The conference call could change it. He could say something about AI and it goes up to 1 million. But outside of that, you know, kind of a nothing burger. They probably, you know, now we're hitting new lows here, but they knew the report was going to be bad, so they released that tidbit about them cutting prices early to probably like stunt the downside a little bit. But we'll see. If you open up below this pivot, you lose that pivot. That would be a big negative. That's all the way down at 164. So we'll watch that tomorrow. But nice little dump there on Tesla. Let's take a look at the NQ. Get that in. Yeah, so it's backing off a little bit here. Yeah, so nice little sell there on the NQ, basically coming back to the lows of the last candle. Nothing terrible, though. We'll see how it opens tomorrow, and that'll really tell us a lot more about the market. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. We'll talk to you all tomorrow.